These credit card mistakes are keeping millions of Americans poor, and most people don't even realize they're making them. I'm about to show you the 5 biggest ones that could be costing you thousands every year. The average American pays $1,230 in credit card interest annually. Here's how to avoid being part of that statistic. By the end of this video, you'll know exactly how to use credit cards to build wealth instead of destroying it. Let's get into mistake number 1. Mistake number 1, only paying the minimum, the $50,000 trap. Here's a harsh truth. Making just the minimum payment on your credit card might feel safe, but it's a financial time bomb. Let's say you have a $5,000 balance with a 22% interest rate. If you only pay the minimum, it could take over 30 years to pay off. Total paid? Over $11,000. That's $6,000 in pure interest. I'm not exaggerating. This one budgeting error can cost you $50,000 over your lifetime if you repeat it with multiple cards. Solution: use either the debt snowball or avalanche method. Snowball means pay off the smallest balance first. Avalanche means tackle the highest interest rate. Use a debt calculator from sites like undebt.it or NerdWallet to build your plan. Be honest, are you only paying minimums? Comment below. That's 1 down, 4 more wealth destroyers to go. Mistake number 2, using credit cards for emergencies instead of having an emergency fund. This one cost me $2,400 in a single emergency. I didn't have savings when my car broke down, so I slapped it on a credit card. Here's the problem. Using credit for emergencies creates long-term debt for short-term problems. You're paying 22% interest when you could have had that covered with cash. Let's compare. A $1,000 emergency on a card at 22% interest costs you around $220 over the next year if you don't pay it off quickly. If you had a basic emergency fund earning 4% interest in a high-yield savings account, you'd be protected and still earning. Solution: build a $1,000 emergency fund in 90 days. That's about $85 a week. Cancel one subscription, reduce takeout, and pick up one side hustle gig weekly. Apps like Capital and Ally Bank make it easy to automate this. Comment which mistake hit closest to home. Mistake number 3, chasing rewards while carrying a balance, math that never works. Unpopular opinion. Most credit card advice about rewards is keeping you broke. Let's break it down. You earn 2% cash back on purchases. Sounds great, right? But if you're carrying a balance and paying 22% interest, you're losing 20% on every dollar spent. You're going backwards financially. The banks want you to focus on points so you don't notice the interest silently eating your income. Solution: rewards only make sense if you pay your balance in full every single month. No exceptions. If you're not doing that, pause the card and pay it down aggressively. Then use a card with no annual fee and focus on essentials only: gas, groceries, recurring bills. Before I show you mistake number 4, quick question. How much interest did you pay last month? Pause and check your credit card statement right now. Mistake number 4, opening too many cards too fast, credit score killer. 2 years ago, a friend of mine opened 3 credit cards in 6 months. Why? For the sign-up bonuses. The result? His credit score dropped 80 points. Here's why this matters. When you apply for too many cards quickly, you get multiple hard inquiries. That signals risk. Plus, new accounts lower your average credit age, which makes up 15% of your score. With a lower score, your car loan, mortgage, or even job applications could suffer. One small mistake can delay financial goals by years. Solution: space out new card applications by at least 6 months. Only apply for a card when it serves a specific purpose, like building credit or managing business expenses. Use a free credit monitoring tool like Credit Karma or Experian to track your score and see what's helping or hurting it. Mistake number 5 is the silent killer of personal finance. Mistake number 5, not understanding how interest really works, the compound destruction. Most people don't realize that credit card interest compounds daily. That means if you don't pay off your balance, Interest is added every day, and then you get charged interest on the interest. Let's say you have a $3,000 balance. At a 22% APR, you're paying roughly $660 a year in interest, just to borrow your own future money. If you carry that balance for 5 years, that's over $3,300 in interest alone. Your $3,000 purchase actually cost you $6,300. Solution: read your statement every month. Focus on the APR, interest charged, and minimum payment warning. Set up auto pay for the full statement balance. If you can't pay it all right now, set calendar reminders for weekly payments to avoid daily compounding. What's your biggest credit card struggle? Let me know below. Here's a quick recap of the 5 credit card mistakes that are keeping people poor. Only paying the minimum turns into a $50,000 trap. Using credit for emergencies instead of building an emergency fund. Chasing rewards while carrying a balance loses you money. Opening too many cards too fast kills your credit score. Not understanding interest allows compound destruction to wreck your finances. These 5 mistakes cost the average person over $50,000 across their lifetime. But the good news? Every single one is fixable starting today. My viewers are fixing these mistakes and saving thousands. This channel is helping people avoid expensive financial mistakes, and I want you to be one of them. Comment "fixed" when you take action. Comment "debt-free" as your goal, and I'll cheer you on. Hit subscribe for financial strategies that actually work. New videos every week.